ora! Welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Financial markets are betting Trump will endlessly extend the ceasefire with Iran, and the crisis there will fade. Ships are getting through the Strait of Hormuz despite the US blockade, but there are plenty of high-stakes risks still, especially as the Chinese Navy warships are heading to the region. But Iran holds all the long-term cards at present. In the US, Trump has renewed his threats to fire Fed boss Powell for corruption, a clear misdirection play that has few falling for it. If he did, it still remains uncertain how this would play out, or even if he has the authority to do so. US mortgage applications rose slightly last week with a return of better refinance activity, but activity for new home purchases slipped lower. The US Fed's Beige Book survey found the conflict in the Middle East being cited as a major source of uncertainty that complicated decision-making around hiring, pricing and capital investment, with many firms adopting a wait-and-see posture. It also found signs of consumer financial strain, increased price sensitivity and rising demand at food banks and other social service organisations. But spending among higher-income consumers was resilient, they reported. The April New York Empire Factory Survey revealed a sharp rise in costs and prices, but it expanded anyway and better than expected on a rise in new orders. But optimism waned and capital spending plans weakened. Meanwhile, home builders in the US are doing it tough with widespread discounting and incentive use to spur weak sales. The NAHB Wells Fargo Housing Market Index fell to its lowest since September, in March, when a rise was anticipated in this sector. And there was a big surprise out of Japan yesterday. Machinery orders rose 13.6% in February from January to be 25% higher than year-ago levels. This was after January orders were up 13.7%. The February year-on-year gain was 3 times higher than what was expected. Japan has been drinking some of that Taiwan juice. But a lot has happened since. Japanese manufacturers' confidence posted its biggest month-on-month drop in more than 3 years in April, dampened by surging oil prices and supply chain disruptions caused by the Middle East conflict. Meanwhile, EU industrial production rose more in February from January than expected, and the decline from a year ago was less than expected. This data is inflation adjusted, but still it isn't particularly positive. In Australia, long-term permanent immigrant arrivals bounced back strongly in February from January to 14,100 for the month, but it was still 4.4% lower than February 2025 and 14% lower than February 2024. For the year to February, permanent arrivals totaled 142,000, down more than 10% from a year ago and the least since September 2023. And Australian Prime Minister Albanese has been in Brunei, where he secured substantial oil and fertiliser supply agreements. The US Treasury 10-year yield is now just on 4.28%, up 3 basis points from this time yesterday. And the price of gold will start today down $44 at $4,493 an ounce. But silver is up $1.50 at $79 an ounce. American oil prices are up $1 at just under $92.50 a barrel, while the international Brent price is also up $1, now just on $95.50 a barrel. And the Kiwi dollar is essentially unchanged from yesterday at this time at 59.1 US cents. Against the Aussie, we're down 30 basis points at 82.5 Australian cents. Against the euro, we're holding at just on 50.1 euro cents. That all means our trade-weighted index starts today down 10 basis points from yesterday at just on 62.4. And the Bitcoin price starts today at $74,167 and down 0.7% from yesterday. Volatility over the past 24 hours has been low, just on plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.